Closure Show. As always, Scott Carson here. Got a very special episode I want to share with you because I've been getting bombarded with people reaching out to me, shooting me emails, asking me questions on social. How are we finding no deals? First of all, are we seeing an increased amount of deals to take a look at? And how are we finding these? How are we coming across these deals? So I thought I'd create an episode called, exactly that, 13 ways to find note deals. And this kind of ties in a lot with our upcoming virtual note buying workshop. If you never attended one of our quarterly workshops, highly recommend you do it, because this is really what we discussed the very first day. Now, I'm not going to do a complete deep dive into all different ways that we find deals, and there's 13. There might be a few more thrown in there as well. But if this is something you're considering, this would be something you would get a lot of value out of day one, because literally we show you the different ways. I'm not one of those guys that likes to teach and just share with you a little bit and then make you get upgraded or sign up for a huge coaching package just to get a little bit more and then upside. That's not the way it works. I like to share with you exactly the ways that we find note deals, and this is straight from the horse's mouth, or in some cases the horse's ass, as people might say. But anyway, it really starts in a couple ways, and I'll just start off with the easiest way all the way to a little bit more complicated way. And the more complicated, and the further you go up this ladder, it may be a little bit more work, but you're going to find better deals and less competition to find these deals because you're doing things that other people aren't doing. All right. Now, the first one is always the easiest. You always can go to different note sale platforms and take a look at these. There's some websites where some people have put together lists, either stuff they own, or they've got some other investors out there to do it. And, like our buddies over at Exchange.Loans, they do a really good job with their commercial loans, or the stuff that they've gotten under contract or consignment from a bank, and then help move that. You may look at auction.com or 10x.com for some other commercial stuff out there. There's also DebtX, which you have to pay to register for. First Financial is a big one for a lot of the bigger trades out there for banks, but there are some smaller ones out there you can take a look at. We talk about the smaller ones that give you access to deals right now on our 3-day class, and easy to look up. They may not have thousands of notes, but they're going to have 20, 30, 40, 50, maybe up to 100 that you can take a look at. And while that's the lowest hanging fruit, it's also going to be the stuff that's picked over the most. I mean, there's been other ones that have been around, like our buddy Val Satir with Watermark Exchange still has it up, but doesn't really update it. FCI Exchange was around for years, but really was hit and miss on what you could find. So there's a few others out there that you can take a look at. Another, number two, that we have found to be really valuable as a way to find note deals is contacting servicing companies, because servicing companies represent investors like you and me. They invest funds. Their clients are usually not only investors, but banks, mortgage companies that they're handling the servicing for. And many of them have a sales platform or are helping their clients sell their non-performing and performing notes where they're looking to move off their portfolio. And this is a great resource to find portfolios or book stuff that you can take a look at. I mean, just recently in the last 2 weeks, we've had a list of 422, 185, 105, 65, 75 one-off notes we get from some of our servicing companies out there. A really great resource to find a list of servicing companies is type in servicing companies, mortgage loan servicing companies. The Texas Savings and Loan Department will allow you to download a list of servicing companies that are licensed to do business in Texas, and about 260, 270 servicing companies, ranging from those that are investors like you and me, just servicing their own portfolio, all the way up to the likes of some of the larger companies out there. So servicing companies are great. It's a different aspect of reaching out to them. You're not going to reach out to the customer service line. You're going to try to contact the business development individual at the servicing companies and say, hey, I'm a note buyer. Do you have any clients that are looking to move stuff off? I'd like for you guys to retain servicing and see what you do. And they would probably rather deal with you if they're going to be able to retain servicing versus dealing with somebody else and just losing that portfolio. So servicing companies are great. A little bit more work, but it's well worth it to be at the front of the line in a lot of cases. Now, third is probably the most common one is banks. It's, when we really cut our teeth from dialing for dollars and calling banks back 15 plus years ago, and still do it to this day by reaching out on a pretty regular basis. And we've built a pretty good database. The beautiful thing about making a relationship with an asset manager at a bank or somebody in charge of special assets or secondary market department is they're going to have stuff on a regular basis. And once you make contact with the right person, it's a beautiful thing. It's an email blast. It's a drip marketing campaign. It's a phone call. Hey, what do you have in your books that you're looking to get rid of? You know what I mean? And they may have one, they may have a quarter. Some banks sell on a quarterly basis, some sell monthly, it just varies. There's a ton of banks out there. Okay. And by banks, I mean FDIC chartered banks that are phenomenal out there. Some big, some small. You're not going to chase the top 5, 10%. You're also not going to want to chase those that have less than 5 branches, but that's somewhere in the middle, that regional size, that multi-city bank. They're going to usually be a little bit more aggressive in their lending, and henceforth runs it a little bit aggressive with their non-performing stuff that they need to be off the books to get cash in to get it lent out. So banks is another thing. That leads us to number 4, mortgage bankers or mortgage companies that are not bank related. You have a lot of companies that have sprung up over the last few years as lending has been really well that aren't a bank, but they're originating them. They're basically banked by Wall Street or wealthy individuals who are lending that money out on a regular basis and then selling those portfolios or packaging those loans together to sell off to Wall Street. They've often got some buybacks they've got to do if the borrower hasn't paid. So mortgage bankers is different than a mortgage company. A mortgage banker is usually going to have a warehouse line, or they're going to have a portfolio that may end up having a service if they've had to take stuff back because stuff didn't get cleaned up or signatures didn't get signed or something wrong with the borrower's collateral files or their qualification package. Maybe their FICO dropped, maybe they missed a payment the first 6 months of the buyback. But mortgage bankers will have stuff. Often they'll have a portfolio stuff like this. And like I said, it's a little bit more work to find these companies, but some of these companies that we buy from, we've been buying for years. May not always have something every month, but we're usually at the top of their list because we just follow up with them with a drip marketing campaign. The same thing, you're reaching out to somebody in secondary marketing at a mortgage company or their warehouse line department if they've got any scratch and dent stuff on their books and stuff there. Number 5 is pretty simple. It's kind of obvious. Other note investors like you and me. You'll be surprised. We often will buy some really good notes from other investors that have bought non-performing notes, got it reperforming, and are looking to sell off the performing asset, or they're looking to sell off their non-performing stuff that they couldn't get performing because A, they didn't want to spend the time and investment in getting it reperforming, or maybe B, they bought a portfolio and they had to buy some stuff that they didn't necessarily like. Note investors often have their buy box, their sweet spot, and then as you're buying in bulk, you often get stuff that doesn't fall in the sweet spot. So you often want to get that stuff sold off so that's not eating up your profits with servicing costs and other things. So other note investors are a great resource. You just got to follow up. You never know what they're going to have. And one of the most important things throughout this is just building your marketing campaign. You'll hear me talk about drip marketing. What does that mean? Well, that means you're sending an email blast, touching base with those people once a month at least. Okay. Number 6 is a resource that we've been using for 15 years. It kind of slowed down a little bit from 2021 to now, but they've made a rebound. It's Lane Guide. Their founder, Richard Lane, has been in the industry for 40 years. He passed away in early part of 2021, and the company was in a little bit of upwards. They got things back going, but they're back. This is a great lead source where you can actually look for asset managers and do a quick asset manager search to download 700 to 1,000 different asset managers at big lending institutions across the country, mortgage companies as well. And so this has been a real great resource for finding emails and phone numbers of the right departments, and then also the special asset departments for some of the larger banks that we have bought stuff in the past. So Lane Guide, there's a cost of Lane Guide's about $150 a year, well worth it, especially now that they're back on track. Our friend Brett Palumbo started a service called DistressPro.com. He recently sold that service off to a couple guys. Distress Pro will look at the FDIC quarterly reports that banks file and help you kind of target and come up with a percentage or a hot list of banks that may be looking to sell. So while Distress Pro may not be a source itself, it is a great resource and training if you're going to be targeting banks. And what I like about what Distress Pro does is it does, or Bank Prospector, whatever it's called, it does link in with a lot of the banks and the right contact person on LinkedIn. So Distress Pro is a really great tool. A lot of information, a lot of good stuff with it. Just be focused. You don't go down a rabbit hole and don't make any phone calls or reach out to asset managers. Okay. We're at number 8 now, actually, is one of my favorite lists that I started off with before I had lists. This was foreclosure lists. Your foreclosure list that you get in each county, each month or each quarter, depending on where you're buying stuff. It's a great list showing you exactly the distressed notes that are in trouble with the bank, showing who the bank or the lender is, and then also giving you a list, showing you who the foreclosing attorney or the trustee is. Now, while depending on what state you're in, like I'm in Texas here, I don't use the foreclosure list to target the addresses on there specifically, but I use those addresses as hot leads into the right department at the bank to get their future list or their nationwide list of non-performing notes if they're across multiple states, or if they're just here in Texas. Hey, what else do you have across the rest of the Lone Star State that we can take a look at? And this will cost you anywhere, 35, 45, up to maybe $100, depending on the county. We like foreclosure listing service for Texas. This is the FLS online list, or the RODI list that's been called for years. You could use foreclosure.com. County Records Research is big on the West Coast, Arizona, Nevada as well out there. Check with your local county. Your local state may have a provider that is unique to your area. But foreclosure list is a great resource to see if there's anything non-performing or coming down the pipeline at the next foreclosure date. Some states publish, like Florida does most of the foreclosure list online. So it's a great way to check it out, see who the bank is over the next 30, 60, 90 days, and start calling some of those smaller regional banks, or I don't say borrowers, but those lenders who've lent money to people, or institutions or LLCs. When COVID finished up, we had a lot of hard money loans that were going to foreclosure. And so it gave us a big list of hard money lenders that we could reach out to potentially buy stuff. But foreclosure list, well worth the investment. You're going to need to clean that list up. Like I said, it may have from a small bank to all the way up to big, but we've used foreclosure list to find IRA investors from private investors that are foreclosing, to really some great deals too that have led to us getting on the list for some other banks. So foreclosures, don't overlook it. It's well worth doing it. Right. And you ain't got to spend all the money in sending out postcards or letters like most other investors are doing. Number 9 is conferences. And I wouldn't say just like note investing conferences. Those are great to attend every once in a while, but you're probably going to find better stuff by going to actually like your state's or area's mortgage banking association, special servicing conferences. There's an event that takes place called IMN.org puts on every year, called the Special Assets Department. They've had several hundred people attend their last couple of years, and they're really good about sharing past attendees as far as the company and the job title. So we leverage that list to find those people on LinkedIn and reach out to them, to their websites to find emails or find the right contact. But it's really working pretty well to find some deals. So leverage conferences, the attendees, the vendors, who's there. There may be some funds there, or institutions that are selling their debt off or looking to sell some stuff off. And definitely, if you're going to pay to go, great, attend it, show up. But in a lot of cases, look where it's at. You may not need to pay to get a ticket. You may be able just to use the website to find out who's attending and reach out to somebody from there. So that's a great resource for finding deals. 10, you can look for owner finance sellers. I throw this in here because a lot of people that are looking for owner finance deals, that's what they've been taught. Hey, if you're chasing owner finance deals, go out and go to the county recorder's office and pull a list of people that have originated a mortgage and send out letters, 50 to 100 letters. I'm not a fan of that because you're basically going to get a seller that may have 1, 2 notes at the most. And it's something you got to do on a regular basis. And most times your owner finance sellers don't want to take a big discount. So while that's still a target that you can get notes from, and we've bought some owner finance notes, or we've brokered them to a few of our brokers who we make a brokering fee inside, or we look at buying some of these if they're, everybody's motivated or has a different motivation when they're looking to sell. But one of the best ways that we find owner finance notes is not to send out letters or postcards, but literally post on different social media channels, LinkedIn, hey, that we're buying notes, and it leads to us getting some offers in or bids in that we can take a look at on a weekly basis. This works just by sharing, hey, we buy notes. Number 11 is, I guess you could say, the holy grail, hedge funds. And there are quite a few different hedge funds that invest in debt. They've bought portfolio of debt. They've bought portfolio, in lump sums, $1 million, $2 million, $5 million in distressed loan portfolios, and they're working to work them out with the borrowers. And those that they don't get back on track for cash flow, they're usually after 90 days looking to sell it off either individually or mini bulk to investors like you and me. You can do a quick hedge fund search on Google and find a whole variety of names, but then you got to filter down to who's actually investing in distressed debt versus who's buying real estate. So there's a few that we deal with. Those select few we share for our students, and especially our one-on-one students, by helping them get to the top of the line. So if you're looking for stuff, that's a great thing to learn at our 3-day workshop. Number 12 is a resource but really helps you identify what banks are hurt the most for the next 90 days or this past quarter, and those that have distressed debt coming down the pipeline in the next quarter. This is the Bauer Financial list. Now, Bauer Financial is a third-party resource that evaluates the quarterly filings of every FDIC charter bank, and then you can actually purchase the list to see what percentage of their portfolio is in default, how many branches they have, what percentage of their portfolio is in dollar amount versus asset amount. It's a really great service. Once a quarter, you're going to pay $300 to $400, depending on how customized you want the list to be. But it is a great resource to find banks, and whether it's residential, commercial. They even got a multifamily listing for those out there looking for apartments. So it's a great resource to use. I think last time we pulled it, there's about 1,600 lending institutions out there that have 5 branches or more. And that's one of the things that we do. We eliminated the list of banks below 5 branches. Just didn't make a lot of sense. Doesn't not mean they don't have assets. They're just a little bit more picky about the discount, and they're not going to be as aggressive, so they're not going to take as big as a discount. Okay, and that was number 12. Number 13 is something that I've been doing for 15 years, and anybody can do this. And this is going to your county recorder's office or your county clerk and doing an assignment search or tracking assignment of mortgages. Now, one of my favorite things to do is when I get lists in, or people send me lists from people, or I guess you could say my competition out there that are selling a portfolio list. I like just to go to the county and pull an asset or two and see who they bought it from, because one form that is recorded in the note sale is an assignment that transfers from whoever originated the note to whoever they sold it to, and whoever they sold it to, if they sold it again. You can literally get to basically contacts and even the name of the individual that you need to reach out to, oftentimes who was able to sign off on that note sale. And we've been able to find some great resources from tracking assignments. Now, you got to be careful. Sometimes, I mean, there's a lot of assignments filed at different counties that and a lot of them used for debt and a variety of things, for highways or public transportation or things like that. So be careful where you look at. But we look at 2 counties really. One in Orange County, Florida, because I'm a big fan of Florida debt and God's waiting room. And then I also look in Harris County, Texas, which is Houston, which is the largest county in the country, and also one of the most active ones here in Texas. And do a search every year, and you'll find somewhere around, I don't know, 14 to 21,000 assignments, and you need to narrow that down. Can't do a search for the whole thing for the full year, but basically I do it month by month at the county recorder's office, and then I look for LLCs, I look for smaller firms, banks who are selling and disposing of stuff, and that gives me a hot list to reach out to, or to take it the next step by jumping on LendGuide or reaching out directly to the individual that signed off and say, hey, I see that you're with the Caliber Mortgage, or New Century, or whoever you might be with, and saw that you sold some notes off. Do you have any more in your portfolio looking to get rid of? This is going to probably take the most amount of work, number 13, but it leads to you finding a lot of great resources. I like even going back to, if I know that a fund has gone out of business and there's been some bigger funds, I can see by researching their name in some of the bigger counties that I know there's more distressed stuff, like looking in Indiana or Michigan or Ohio or Florida, and doing a search for that hedge fund name. I can often find people that they've sold those notes to a couple years ago, and that leads to a whole hot list of note investors like you and me, or note buyers and note sellers as well. So these are just some of the things that we cover, like I said, in our 3-day virtual note buying workshop. It's well worth the price of admission. We show you how to pull a list of literally thousands of asset managers and names the first day. And as many people say, it is the most eye-opening discovery that, hey, there are plenty of deals to go around. You just got to know where to look. So if you've been sold a bag of crap that's saying, oh, you're too small, nobody's going to deal with you. Look, banks will sell you if you know what to say, how to say it, and what to say. And when you reach out to these different sources, there's things you got to say, things you don't want to say. There's specific lingo, wording, and we cover that all in our 3-day class. So host it once a quarter. Check it out at notebuyingfordummies.com. I'm running a variety of different specials. Usually the specials are figured in, so click on the sign up page and the discounts usually taking place. But normally it's $9.97. That includes you and a partner, you a spouse or business owner. You get the replays, the previous workshop, you get 200-page manual with all the different forms, contracts, scripts, emails that we send out on a regular basis, contracts, all that good stuff. And it's just the first day. Over the next 2 episodes, I'll be sharing how we find and raise funding, and then also talk about the different exit strategies as well. But just want to give you a bit of an insight into that. And this is the number one thing that people always ask: how do you find notes? So hopefully you enjoyed the 13 ways that we find note deals. Now it's all just to you to either take action or learn how to do it the right way by joining us on a 3-day workshop. So go out, take some action. Hopefully we'll see you at the next virtual note buying workshop and turn you from a note buying dummy into a note buying smarty.